Alright, students, the next chapter which we are going to revise is the types of duties ka chapter. Sir, can you give us a quick linking? Everyone, take a quick linking. See, once you have arrived at your CIF value, once you have arrived at the CIF value, now you have to go ahead and charge the different types of duties. Basic custom duty, social welfare surcharge, sir, CVDs. So, sir, on what values will this be charged? What are the different types of duties which are there? We are going to now understand in the chapter of types of duties. Okay, sir, let's go ahead and start. Everyone over here. In our chapter valuation, we went ahead and learned how to calculate assessable value under section number 14.1. Section number 14.1 went ahead and told transaction value. Section number 14.2 told about the, sir, section number 14.2 told about the tariff value. Yes, sir. So assessable value means the transaction value, which is the CI value, or the tariff value, which is notified by the CBIC on item like gold, silver, etc. Yes, sir. Now, the first duty which you have to go ahead and charge is the basic custom duty. Basic custom duty can be standard rate or the preferential rate. Always remember, basic custom duty is levied under section number 12 of the Custom Act on goods which are imported or exported. Okay, sir. And it is levied at the rate which is told in the first schedule and second schedule of the Custom Tariff Act. First schedule goes ahead and gives you import duty ka rate. Second schedule goes ahead and gives you export duty ka rate. First schedule tells you about standard rate of duty and also preferential rate of duty if you have gone ahead and imported goods from a preferred nation, that is a most favored nation. Okay, sir. So, sir, basic custom duty is levied under section number 12 of the Custom Act, and it is levied under section number 2 of the custom tariff act. Means it is basic custom duty ka basically levy is coming from section number 12 of the Custom Act 1962. Everyone over here. So custom duty is levied on what, sir? It is levied on imported and exported goods. So it is levied on all goods imported or exported. Sir, what is the rate? At the rate which is told in the Custom Tariff Act. And sir, what is the assessable value? The assessable value for levy is the transaction value or the tariff value. Basic custom duty under section number 2 of the Custom Tariff Act. The rate at which the duties of custom, basically basic custom duty, shall be levied under the Custom Act are specified in the first schedule and the second schedule of the Custom Tariff Act. Yes, sir, point is clear. Now, everyone over here. Sir, for an example, I want to go ahead and claim preferential rate of duty over means there are two rates of duty which will be given. So, if preferential rate of duty is given in the Custom Tariff Act for an item, if it is not given standard rate of duty, but if preferential rate of duty is given, sir, I want to go ahead and claim preferential rate of duty. How to go ahead and claim? It is told, sir, in section number 4, preferential rate of duty related discussion is done, where they have gone ahead and told levy of duty where standard and preferential rate of duty both are specified. You can go ahead and claim preferential rate of duty also. It says duty shall be levied at preferential rate, but there are some subject to fulfillment of condition. You have to fulfill some condition, only then you can go ahead and claim preferential rate of duty. Number 1, at the time of importation, importer should make a specific claim. Sir, specific claim for the preferential rate of duty. Number 2, so you should claim, you should ask for it, only then they will give you. Number 2, importer also should claim that the goods which you have gone ahead and imported are produced or manufactured in the preferential area. Okay, sir. Thirdly, the origin of the goods shall be determined by the government in accordance with the rule made by the central government and notified in the official gazette. So, sir, the origin shall be determined in accordance with the rules made by the central government and notified in the official gazette. Basically, custom determination of origin rule goes ahead and says if you have gone ahead and imported unmanufactured goods, means raw material, then those unmanufactured goods should be produced in that country. If you have gone ahead and imported manufactured goods, it means those goods should have been at least, sir, those goods ka raw material should be of that country. All these things are told in determination of origin ka rule. Yes, sir. Point is clear. Then, sir, the area should be notified to be a preferential area by the central government by notification in the official gazette. Sir, the area which you are going ahead and importing from should be notified as a preferential area. Only then you can go ahead and claim preferential rate of duty. Number one, you have to go ahead to claim preferential rate of duty. Number one, you have to go ahead and make specific claim. Number two, you should also claim that the goods are manufactured or grown in that preferential area. Number three, the origin of the goods shall be determined by the government in accordance with the rules, which are basically it shall be determined in accordance with the rules made by the central government. And fourth one is the area should be notified as in preferential area. Only then you can go ahead and claim preferential rate of duty. Okay, sir. Point is clear. A civil value pay first duty will go ahead and charge its basic custom duty, either a standard rate or a preferential rate, subject to fulfillment of the condition. Then the next duty over here is protective duty. Sir, what do you mean by protective duty? Over here, everyone listen to me very carefully. Protective duty, whenever you want to go ahead and claim, everyone over here, you will have to go ahead and see this. Sir, section number 6, power of the central government to levy protective duty on certain cases. Basically, not protective duty when you have to claim. Protective duty is basically levied by the central government. Yes, sir. Under section number 6 of the under section number 6 of the Custom Tariff Act, government has the power to go ahead and levy protective duty. Sir, when is protective duty levied? When central government goes ahead and sees that, sir, they have to go ahead and protect the domestic industry. Basically, the domestic industries are to be protected. Then central government goes ahead and levies protective duty. Sir, it is levied by the central government on the recommendation of the tariff commission to protect the interest of the domestic industries. When the central government goes ahead and sees that domestic industries are to be protected, might be one item pay. Actually, the custom duty should be 20%, but by mistake, the tariff commission has gone ahead and fixed it at 10%. Then, for the time being, so that domestic industries don't die, the rate should be increased immediately, and immediately they will go ahead and increase it by going ahead and issuing a notification in order to protect their domestic industry. So here it is levied by the central government on the recommendation of the tariff commission to protect the interest of the domestic industries. Okay, sir. Protective duty imposed on goods to be specified in the first schedule as the duty leviable in respect of such goods. Protective duty, when it is levied, sir, actually in the Custom Tariff Act it is told only 10%, but 10% protective duty has been levied. Then it will be deemed that in the Custom Tariff Act 10 plus 10, 20% duty has been told. So whenever protective duty is levied, it is protective duty imposed on goods be deemed to be specified in the first schedule as the duty leviable in respect of such goods. Okay, sir. If a notification is issued, the central government has to go ahead and introduce and bill in the parliament in the next parliamentary session to give effect to the proposal in regards to the continuation of protective duty. For an example, government went ahead and told 10% is the duty in custom tariff act. We want to impose 10% protective duty. Then government has to go ahead and make sure that that remaining 10% ke liye government has issued a notification now. But within the next parliamentary session, means when the next parliamentary session is coming, they have to go ahead and introduce a bill and get the custom tariff act amended to increase the duty by further 10%. Sir, it says over here, if notification is issued by the central government, it shall introduce a bill in the parliament during the next parliamentary session to give effect to the proposal in regards to the continuation of protective duty. If the notification under subsection 1 is issued when the parliament is in session, parliament is already in session, then Baba go ahead and introduce the bill in that current session only. Notification for imposing protective duty shall cease to have effect. Better go ahead and introduce in the parliament session. Otherwise, within the 6 months, it will go ahead. After the expiry of 6 months from the date of introduction, sir, it says notification shall cease to have effect on the expiry of 6 months from the date of introduction in the parliament if it doesn't become a law. Everyone over here, what they are telling is notification you have gone ahead and issued saying from today, custom duty, protective duty will be imposed. Now, make sure that you introduce it in the parliamentary session. If parliamentary session is ongoing now, okay now. If not now, then when the next parliamentary session is there, please go ahead and introduce. Once you go ahead and introduce the bill to increase the duty, the bill should be passed. They are telling within 6 months. If it is not passed, then sir, see over here, everyone. It says notification shall cease to have effect. Uh, Notification imposing protective duty shall cease to have effect on the expiry of 6 months from the date of introduction in the parliament if it doesn't become a law. So once the bill is introduced in the parliament, it should be passed within 6 months. Otherwise, the notification to go ahead and issue, to go ahead and charge protective duty shall cease to have effect. Okay, sir, point is clear. Everyone over here now. So a civil value, imposed basic custom duty, imposed protective duty under section number 6 of the Custom Tariff Act upon the recommendation of Tariff Commission. Okay, sir. One total came. Now, on this total, you will go ahead and impose CVD under section number 3, subsection 1, which is basically levied on. Sir, CVD under section number 3, subsection 1 is basically levied on alcoholic liquor for human consumption. What is CVD? Countervailing duty. So, when earlier what used to happen when goods used to be manufactured in India, there was excise duty. Now, imported goods pay, there was no excise duty. In order to countervail the effect, increase the price of the imported goods, government used to go ahead and charge, sir, CVD 31, which was like how much excise duty is charged on goods manufactured in India. Same amount of CVD was charged, but now see, now excise duty is not there in India on many goods. Only on very few goods excise duty is there. Hence, CVD 31 applicability is also very limited. It is applicable levied on alcoholic liquor at the rate which is notified by the central government. It is levied on tobacco product, HP man, high speed diesel, petroleum crude, motor spirit, aviation turbine fuel, and natural gas at the rate of excise duty on like article manufactured in India. So, whatever is the rate of excise duty on tobacco or HP man being manufactured in India, that same rate will be applicable when you are going ahead and importing tobacco products and HP man, high speed diesel, petroleum crude, motor spirit, aviation turbine fuel, and natural gas. Yes, sir, point is clear. CVD 31 is over here, everyone. Detailed discussion I have gone ahead and given below. You can read it at home. Okay, sir, point is clear. Then the total will come. Then you have to go ahead and levy social welfare surcharge. Then you have to go ahead and levy social welfare surcharge. Always remember, social welfare surcharge is on protective duty, basic custom duty, and on CVD 31. You have to go ahead and calculate social welfare surcharge at the rate 10% on basic custom duty, protective duty, and CVD 31. Okay, sir. Social welfare surcharge is levied under which section, sir? It is levied under section number 110 of the Finance Act 2018. Social welfare surcharge is levied only on imported goods. Always remember, it is levied on all imported goods. You can cut this on all imported goods only. It is never levied on export. Always remember, when you are going ahead and exporting, export pay only basic custom duty comes. There is no social welfare surcharge. Okay, sir, point is clear. Why is the government levying this? It is levied to fulfill the commitment of the government to provide and finance education, health, and social security. It is levied on basic custom duty and any any other sum and any other sum it is levied on basic custom duty and any other sum charged as custom duty except what? Safeguard duty, CVD on subsidized article, anti-dumping duty, social welfare surcharge, IGST, and GST compensation cess. Basically, I'll tell you, social welfare surcharge is at 10% and it is charged on basic custom duty, protective duty, and CVD 31. That's it. Now, the next one is CVD 35. Earlier, what was happening in India on Indian goods? There was sales tax and VAT. Now, imported goods, when you import, the seller will never go ahead and charge VAT and sales tax. Hence, in order to go ahead and bring Indian goods and the imported goods in parity, Indian goods pay if VAT was for 10%. For an example, whatever VAT was there, they were going ahead and telling we will go ahead and charge countervailing duty. But here there is a catch. countervailing duty maximum is 4%. Everyone over here. But now, because VAT is not there on goods or sales tax is not there, it is levied on imports to counterbalance the effect of VAT and sales tax levied on such sale of like article in India. Maximum 4% is levied now, and it is levied only on HP man. As of now, CVD 35 is only on HP man, high speed diesel, petroleum crude, motor spirit, aviation turbine fuel, and natural gas, and it is levied maximum at the rate of 4%. Yes, sir. In detail given below. Okay, sir. Now, here you will get the total. People, you started with CI value or the tariff value, basic custom duty, preferential rate or standard rate, then you levied protective duty, then you levied CVD 31, and now social welfare surcharge came, then the total came. On the total, you will go ahead and levy CVD 35. What is CVD 35, everyone? CVD 35 is basically to counterbalance the effect of VAT or sales tax. They are going ahead and levying CVD 35. Then the total will come. Now, the next duty is safeguard duty. Very, very important. Always remember one thing, everyone. Safeguard duty is levied under section number 8B of the Custom Tariff Act on the assessable value. Sir, on the assessable value means this value, Babad, on the CF value or the tariff value, it is being levied. Safeguard duty is levied under section number 8B of the Custom Tariff Act on the assessable value. Let's read about safeguard duty. Very, very important. Section number 8, power of the central government to go ahead and apply safeguard measure. The name was changed and it was kept as safeguard measure. Now, sir, circumstances in which safeguard measure can be levied by the central government. When can central government go ahead and charge? If central government, after conducting inquiry, is satisfied that any article imported into India in such increased quantity, but always remember, increased quantity of imports are coming into India, and domestic industries are telling, sir, such increased quantity may we will not be able to survive. It is actually going ahead and causing or threatening to cause serious injury to the domestic industry. Then in order to protect the domestic industries so that they become more competitive, to give them more time to buy machineries and become more competitive, government goes ahead and says imported goods pay for the time being will levy safeguard duty, and hence it then central government by notification in the official gazette applies safeguard measure on that article as it deems appropriate. Basically, whatever is the injury margin, that much government will go ahead and charge safeguard duty. Now, always government doesn't go ahead and charge only safeguard duty. There are safeguard measures. Sir, when I go ahead and tell you what is the objective of safeguard measure is to protect the interest of the domestic industry caused due to increased import. Okay, sir. Now, what are the modes of safeguard? Sir, the various modes of safeguard is how government will go ahead and safeguard the domestic industry. Number one, government will impose safeguard duty. Number two, government can go ahead and impose application of tariff rate quota. Government will go ahead and say if quantity 10,000 units are coming, there will be no safeguard duty. But increased quantities are coming, then we will go ahead and impose. So up to a certain limit, government will say no safeguard duty. But when the quantity increases, government will go ahead and impose safeguard duty. That is known as tariff rate quota or such other measure as the central government may consider appropriate. Central government will go ahead and impose. Sir, minimum level of tariff rate quota. They will go ahead and see average imports of the last 3 years for which statistics are available. They will take last 3 years ka imports ka data and average will be fixed as the tariff rate quota. Okay, sir, point is clear. Next. Sir, exemption from safeguard duty. When will safeguard duty not be imposed? Everyone over here, if article is coming from one developing country, always remember, if article is originating from one developing country and the share of import of that article from that country, it does not exceed, it is only up to 3% of the total import of that article into India, then there will be no safeguard duty. Always remember, if article is originating from number one developing country, only one developing country, and share of import is up to 3%, no safeguard duty. Number two, if article is originating from more than one developing country, might be 3 developing countries, then Baba, you have to see each with share less than 3% and total up to 9%, then Baba, the safeguard duty will not be imposed on them. So if, for an example, article is originating from 4 developing country, 1 may the share is more than 3% or it is equal to 3%, then our safeguard duty will come. But 3 developing countries with share of import less than 3% and total up to 9%, then Baba, there will be no safeguard duty. It says the articles originating from more than 1 developing country, the aggregate of import from developing country, each with less than 3% import share taken together does not exceed 9, then also there will be no safeguard duty. Number one country, then up to 3%, then it will be exempt. Sir, more than 1 developing country, you have to go ahead and total is up to 9. But each should be each with less than 3, each with less than 3%, and total up to 9%. It shall be, there shall be no custom duty, no safeguard duty on import of that article from that country. Sir, if import is done by EOU or an SEZ, then also there will be no safeguard duty. But if the EOU or the SEZ goes ahead and clears those goods into India or makes goods from those imported material and those goods are cleared into India, then the safeguard duty shall be levied on that portion of article so cleared or so used as was leviable when it was imported. Only on that much article which was cleared into India, safeguard duty shall be levied. Okay, sir, point is clear. Provisional imposition of safeguard duty. Can the government go ahead and impose safeguard duty provisionally? Yes, sir. Central government can go ahead and impose that duty, safeguard duty provisionally on finalization if the central government is of the opinion that there was no threat to the domestic industry and the safeguard duty which was imposed was by mistake, it should not have been imposed provisionally, then government will go ahead and refund. The maximum duration for which safeguard duty can be imposed is 200 days. Can retrospectively safeguard duty be imposed? No, sir. Retrospective imposition is not allowed. Maximum duration for which safeguard duty can be imposed is 4 years, plus extension can be done for the 6 years. It means 4 plus 6. Maximum safeguard duty can be imposed for 10 years. Okay, sir. Point is clear. Let's go ahead, everyone. Always remember, safeguard duty is on the assessable value under section number 14.1 or 14.2. Yes, sir. Point is clear. Let's go ahead. The next one is CVD on subsidized article under section number 9 of the Custom Tariff Act. What happened? Sometimes some countries, for an example, China will tell its manufacturer, send it to India. When you send it to India, we will give you subsidies. So Chinese government is giving one person, its manufacturer, subsidy when they are going ahead and sending the goods to India at a reduced price. That is known as CVD, countervailing duty. Then Indian government will go ahead and impose countervailing duty in order to countervail the effect of the subsidy. Okay, sir, point is clear. So if Chinese government is going ahead and giving subsidy to the manufacturer, he will try to send the goods into India at a lower price. Indian government will counter effect by going ahead and imposing what? Sir, countervailing duty and on subsidized article under section number 9. Whenever a country pays subsidy upon exportation into India, central government may impose CVD not exceeding such subsidy. So everyone, you have to always remember, government will go ahead and see causal link, cause and effect ka link, and government will see cause is the subsidy is 10 rupees, effect is only 8 rupees, then cause is the subsidy, injury in India is only 8 rupees, then cause or effect, whichever is lower, that much amount of CVD will be charged. 10 or 8, whichever is lower, 8 rupees ka CVD shall be charged. Yes, sir, point is clear. Let's read about CVD on subsidized article. Very, very important for your exam this time. Section number 9. When a country pays subsidy upon exportation of any good, Chinese government is paying subsidy to the person in China. When any country pays subsidy on article imported into India, on exportation of an article into India, Indian government will go ahead and charge anti-subsidy duty, which is CVD on subsidized article. Central government may impose CVD not exceeding the amount of subsidy. CVD will be the notified amount, which is basically cause and effect ka lower amount. Cause is the subsidy, effect is the injury, whichever is lower, that much amount of CVD shall be charged by the government. Maximum CVD shall not exceed the amount of subsidy which is given by that foreign country. Sir, when is a subsidy deemed to exist? They can ask you in the exam, when is deemed that a subsidy is existing if there is a financial support by the government. Chinese government is giving financial support to the manufacturer or any public body within the territory of the exporting country. That is where there is a direct fund transfer or government revenue that is otherwise due is foregone. So Chinese government is telling its people, you export the goods to India, we will go ahead and not charge you income tax. We will give you tax holidays. All these things, if they are trying to do, they are trying to go ahead and give subsidy. So, sir, government revenue that is otherwise due is foregone and not collected. A government provides goods or services other than general infrastructure. That means government is trying to give subsidy to those manufacturers for sending the goods to India. Then, sir, a government grant or grant a government grants or maintains any form of income or price support which operates directly or indirectly to increase export of an article from its territory, then also a subsidy is deemed to exist. Okay, sir, point is clear. Now, Indian government went ahead and told one person from China is sending calculator into India, he has got subsidy. Indian government will levy anti-subsidy duty on calculator. He will now try to circumvent, he will try to avoid the duty. What are the ways which constitute avoiding of duty? You know what that person will do? That person will send the calculators by naming it differently, minim typewriter. So, sir, he will try to circumvent the duty. What are the ways of circumvention? Number one, by altering the description, name, composition of the article in on which duty has been imposed. He will change the name, he will change the composition or the description. Sir, by importing of such article in unassembled or disassembled form, me in India will get the goods from the Chinese by going ahead and importing it in disassembled form. Sir, unassembled form, assembly will do it in India. That is constituting a circumvention. Sir, by changing the country of origin, first we will get the goods to Dubai. From Dubai, we will get it to India because when you are getting from China, only then CBD is there. We will get it from Dubai. First, send from China to Dubai, then Dubai say you get it to India. That people will try to do. That is also known as circumvention. Then, in any other manner whereby the countervailing duty so imposed is ineffective, will also constitute as circumvention. In the exam, they will ask you what are the ways that will constitute a circumvention. Now, here the amendment is in such case, investigation will be carried out by the central government and CVD can be imposed on such articles. So what will happen whenever there is a circumvention, government will go ahead and say, now you have gone ahead and renamed it as mini typewriter. From today on this type of mini typewriters also CVD will be imposed. So it says CVD will be imposed from such date. Now they have gone ahead and told CVD will be imposed from which date? Now the person is going ahead and sending the goods in some other name. So on the goods which are named newly, means the new name ka goods pay also you want to charge CVD, but from which date? They have gone ahead and now told from such date not earlier than the date of initiation of the inquiry as the central government may by notification in the official gazette specify. So government will go ahead and tell in the official gazette from which days the CVD will be imposed on the new named article also. Okay, sir, point is clear, but it can't be earlier than the date of the inquiry. The day government starts the inquiry that there is a circumvention, not earlier from that day the CVD can be imposed on the new article, means the renamed article. Yes, sir. Let's go ahead. Everyone over here. Now, there is something called an absorption. When absorption of CVD, there is a new introduction. Central government on inquiry is of the opinion that the absorption of CVD has taken place, rendering the CVD ineffective. It may modify such duty to counter the effect of absorption from such date not earlier than the date of the initiation of the inquiry as the central government by notification in the official gazette specify. Sir, what do you mean by absorption? Everyone, what happened? The Chinese person was going ahead and exporting the goods into India. Indian government went ahead and imposed 20 rupees ka CVD. Now, what the Chinese went ahead and did, he went ahead and reduced the export price by further 20 rupees. He told the CVD ka effect, I will go ahead and absorb it in India. Don't increase the resale price. That is known as absorption. They are going ahead and telling if absorption is said to have taken place if there is a decrease in the export price of an article without without any commensurate change in the resale price. Means he was going ahead and exporting at 80 rupees earlier. Now he went ahead and made the export price as 60. Baba, when he has gone ahead and made the export price as 60, government is going ahead and telling if there is a decrease in the export price of an article without any commensurate change in the resale price in India of such article imported from the exporting country or territory or under such other circumstances as may be provided in the rules. You know what happened? Now, government went ahead and increased, government went ahead and charged 20 rupees ka CVD. Okay. Now, when government went ahead and charged 20 rupees ka CVD, I called the Chinese guy, government, Indian government is charging 20 rupees CVD. What to do? He told, no problem. I will go ahead. You don't change the resale price in India. You keep it stagnant. I will go ahead and reduce my export price. Export price reduced. India mein resale price did not change only. Government is telling, I want to go ahead and charge CVD on subsidized articles so that Indian goods and those goods become competitive. They went ahead and again reduced the export price. Again, the imported goods are becoming cheaper. Again, it will be a problem for the domestic industry. Then, sir, provisional imposition, is it permissible? Yes, sir, it is permissible. But later on finalization, if there is an amount which is collected extra, that has to be refunded. Also, they have gone ahead and told no CVD on subsidized article on import by 100% EOU or SEZ. But it will be imposed if after going ahead and importing a EOU or an SEZ goes ahead and clears those goods in India or manufactures the goods and clears the manufactured goods in India, that much amount of goods which are cleared in India, on that they will be liable to pay CVD on subsidized article. Then retrospective imposition allowed 90 days from the date of issue of notification. 90 days retrospectively CVD on subsidized article can be imposed. Sir, duration, what is the duration of the CVD? Always remember, CVD ka duration can be 5 years plus extendable by further up to 5 years. Earlier it was by extendable by a further period of 5 years. Now they have gone ahead and told it is extendable by a further period up to, means 5 plus 5, maximum is how many years? 10 years. Okay, sir, point is clear. Next, sir, 5 years के लिए duty was imposed, CVD on subsidized article. In the last year, government started a review whether we want to go ahead and impose it for the next further 5 years or not. When the review is going on, the duty will continue to be effective for a further period of 1 year. If duty is under review, it shall continue to remain in force till the outcome of such review for a further period of 1 year. Then, sir, if the duty, sir, it says if the said duty is revoked temporarily, can the government go ahead and revoke the duty temporarily? Yes, Baba, government can go ahead and revoke the duty temporarily. The period of such revocation shall not exceed 1 year at a time. So, government can go ahead and say in between this year, 1 year ke liye, there will be no CVD. Can government do that? Yes, Baba, government can go ahead and revoke the duty for a period up to 1 year. Okay, sir, point is clear. Let's come back, everyone. So we went ahead and learned till now that the first one is assessable value. Okay, sir. On the assessable value, basic custom duty, then protective duty, total will come. Then CVD 3.1. Then, Baba, you take the total. Now, social welfare surcharge will be charged. Social welfare surcharge is on basic custom duty, protective duty, and CVD 3.1. Okay, sir. Then, after that, again total will come. Then CVD 3.5 to come. That is 4% on alcoholic liquor, not on alcoholic liquor, on HP man. Okay, sir. Then you will get a total. Now, safeguard duty. Safeguard duty was charged by the government when there was increased imports. Sir, if one country is giving subsidy, Indian government was going ahead and charging CVD on subsidized article. Now, the next one over here is anti-dumping duty. So if there is a person who is going ahead and dumping goods into India, Indian government will say, if you are trying to do dumping, we will go ahead and impose anti-dumping duty. Everyone over here. For an example, one person is in the US. In the US, his normal selling price of a goods is 200 rupees, but he is he has 1 lakh units of that goods which is remaining with him. Normal selling price is 200, but he is selling to India, export price is only 100. Means how much is the dumping he is trying to do? That is known as margin of dumping. Margin of dumping is rupees 100. Okay, the goods came into India, 100 rupees, 20 rupees basic custom duty, 2 rupees social welfare surcharge, 122 is the landing price. India में selling price of that goods in the domestic market of India is actually 190 rupees. Then you have to go ahead and compare these two. It will be known as injury. So Indian selling price and the landed price, if you go ahead and compare, that is known as the injury. Over here, if I go ahead and tell you how much is the injury, 190 minus 122 will give you 68 rupees ka injury. Always remember, government always try to create a causal link. Cause and effect. Cause is the dumping, effect is the injury. Whichever is lower, government will go ahead and impose that amount as anti-dumping duty, and hence government will impose 68 rupees as the anti-dumping duty. Okay, sir, we understood that is anti-dumping duty. Yes, Baba, let's go ahead and read about anti-dumping duty. Section number 9A, anti-dumping duty on dumped article. What is anti-dumping duty? See, what is dumping? Dumping is an act where one person who has lot of goods which are remaining with him will go ahead and dump all those goods into India at a very lower price, even lower than his cost. He will go ahead and dump it into India so that all the domestic industries under that dump of good, all the domestic industries will die. Once the domestic industries die, now he will start selling the goods into India at a higher price and start making profit. That is known as dumping. And government of India says if anyone is trying to do dumping into India, we will protect our domestic industries by charging anti-dumping duty. Everyone over here. Dumping happens when article is exported from another country at less than normal value. That is, normal value is greater than export price. Normal value was how much, sir? 200. He exported into India at 100. So normal value say when the export price is more, then it is known as dumping. And dumping ke liye always it is lower of margin of dumping and injury margin. What is dumping? Sir, anti-dumping duty will be always lower of margin of dumping and injury margin, whichever is lower. Okay, sir. Point is clear. Margin of dumping, normal value. How do you calculate margin of dumping, everyone? Margin of dumping is always normal value in the exporting country and export price ka difference, and injury margin is the landed price minus the selling price in India. Everyone see over here, normal value, which is the selling price in the domestic market of the exporting country, or export price of the product, the difference of that is the margin of dumping. Injury margin is the fair selling price in India minus the landed value. Okay, sir, from which date is the anti-dumping duty? Date on which anti-dumping duty commences. Always remember, when no provisional duty is imposed, anti-dumping duty is not imposed provisionally. The date of publication of the notification imposing anti-dumping duty in the official gazette, the day it is published in the official gazette, from that day anti-dumping duty shall be effective. Sir, where provisional duty is imposed, if anti-dumping duty was imposed provisionally, the date of publication of the notification imposing provisional duty in the official gazette, from that day the anti-dumping duty is effective. Sir, when anti-dumping duty is effective, is imposed retrospectively from a date prior to the imposition of provisional duty, then, so sir, then it is going ahead and telling such prior date as may be notified in the notification imposing anti-dumping duty, but not beyond 90 days from the date of such notification of provisional duties. Today the notification was issued, then maximum duration you can go ahead and impose anti-dumping duty retrospectively is only 90 days. Sir, can there be circumvention, absorption of anti-dumping duty? Yes, Baba, the same which I gone ahead and told you, safeguard duty, anti-dumping duty ka circumvention also can happen. Absorption of anti-dumping duty, yes sir, that can also happen. And no anti-dumping duty on article imported by 100% EOU or SEZ, but it can be imposed. It can be imposed if the goods are cleared by the 100% EOU or the SEZ into the domestic tariff area. Sir, can provisionally anti-dumping duty be imposed? Yes, Baba, it is permissible, but later on finalization, if they realize they have collected more, they will go ahead and refund. Sir, next, this is the same thing, no anti-dumping duty on goods which are imported by 100% EOU unless they are cleared into the domestic tariff area. Yes, sir, that point is clear. Actually, it is repeated over here, and here I have repeated, correct? Okay, sir, point is clear. Duration, anti-dumping duty shall be effective for 5 years from the date of imposition. Earlier, it was told that further extension can be done by 5 years. Now they are telling further extension can be done up to 5 years. It means, sir, extendable on review for a period of 5 years. It is now up to 5 years. It means 5 years is already there. Now, if you want to extend it, you can extend by 1 year, 2 year, 3 year, 4 year, or 5 year. Extendable up to 5 year. Okay, sir, done. Point clear. If duty is under review, on expiry, it shall continue for a further period of 1 year. Sir, if 5 years के लिए duty was imposed, last year में they started a review, then sir, it till what time it shall continue? Then they are going in and telling if review is going on, then duty shall continue to be applicable for further 1 more year. Sir, can the duty be revoked temporarily? Yes, Baba, but not for a period exceeding 1 year at a time. Sir, refund of anti-dumping duty? Yes, Baba, refund of anti-dumping duty can be given. For an example, anti-dumping duty was charged on an importer. Later, importer went to the central government and he proved that, sir, there is no dumping which is happening. Actually, the exporter who was there, he is a good person now. He is not dumping into India. In that scenario, whatever anti-dumping duty is collected, government will go ahead and give you a refund. Okay, sir, point is clear. Next, everyone over here, please come back. The next one, now you will get a total. So, sir, first of all, always go ahead and take, sir, the transaction value or the tariff value. Okay, sir. Then on that basic custom duty under standard rate or preferential rate. Then, sir, then you will have to go ahead and add protective duty. Okay, sir. So standard rate or preferential rate, then protective duty, you will get a total CVD 31 you will go ahead and charge, then you will get a total, then social welfare surcharge you will charge on the CVD, protective duty and basic custom duty, then you will go ahead and get a total, then you have to charge CVD 35, yes sir, then you will get a total, then you will go ahead and charge, sir, CVD on safeguard duty, then you will go ahead and charge CVD on subsidized article, then you will go ahead and charge anti-dumping duty. Okay, sir, point is clear. Now, sir, what is the next amount? Now, there will be a total which will come. Everyone, on this total, you will go ahead and charge. What will you go ahead and charge? This total is known as the value under section number 38, and on this value you will go ahead and charge IGST under section number 37. Everyone, on this value IGST, sir, for Indian goods 12% is applicable. For the imported goods also CVD 37 shall be applicable, which is nothing other than the IGST levied on the domestic goods. Imported goods pe they will charge IGST, but that is levied under the Custom Act under section number 3 subsection 7 of the Custom Tariff Act. Okay, sir. Indian goods pe IGST is there, imported goods pe CVD 37. Sir, Indian goods pe GST compensation cess is there, imported goods pe GST compensation cess is charged under section number 39. Everyone over here, GST compensation cess under section number 39 on the value which is E. Yes, sir. Point is clear. Let's go ahead. Everyone, see over here. CVD, which is GST. GST, basically IGST will be charged, and the maximum amount IGST can be charged is 40%. Okay, sir. Point is clear. Please read about it at home. More you can read about it at home. But this value is known as 38 ka value. On this IGST will be charged, and on this only GST compensation cess will be charged. Now, I want to go ahead and talk about bond to bond transfer. Everyone over here, listen to me very carefully. For an example, you went ahead and imported some goods into India. You got the goods transferred to the warehouse. Now, you had gone ahead and imported the goods. This goods ka, when you imported, after that all adding basic custom duty etc. 38 ka value is coming 5 lakh rupees. Okay, everyone. 38 ka value is coming how much, sir? 38 ka value is coming 5 lakh rupees. Okay. Now, sir, when the goods were in the warehouse, I went ahead and transferred the bill of lading to one more person. Ram went ahead and transferred it to Sham. Now, when Sham goes to clear the goods from the warehouse, those are known as warehouse goods. When they are being sold, it is also known as bond to bond transfer. And in that scenario, if I had gone ahead and sold to Ram at 7 lakh rupees, then they are going ahead and telling you will have to go ahead and pay. You will have to go ahead and pay IGST on 38 ka value or this transaction value, whichever is higher. It means I'll have to pay IGST on 7 lakh rupees. Everyone over here, see over here, they are telling bond to bond transfer ka case mein where the whole of the goods are sold, value under section number 38, which we just now learned how to calculate, or the transaction value whichever is higher, on that you have to go ahead and pay the IGST, or the GST compensation cess also will come on that value. Sir, when the goods are sold in part, only that part ka you find out 38 ka value, or that part ka transaction value, whichever is higher pay, you will have to go ahead and pay IGST. And Baba, GST compensation cess on the bond to bond transfer is told under section number 310A. Basically, sir, GST compensation cess, always remember everyone, sir, you will have to go ahead and first of all take your transaction value or the tariff value. You will add basic custom duty, okay sir. You will add protective duty, okay sir. You will get a total. On this total you will add CVD 31. If anything is there, then the total will come. Then social welfare surcharge, okay sir. Social welfare surcharge only on basic custom duty, protective duty and CVD 31. Then one total will come. On this total, now you have to go ahead, everyone over here, now you will charge CVD on subsidized safeguard duty, CVD on subsidized article, and anti-dumping duty. Yes, sir, we will go ahead and add this. Now the total will come. This total is known as 38 ka total or 310 ka total. Always remember one thing. Everyone over here, listen to me very carefully. 38 or 310 ke liye, this is the total. On this, IGST is charged. IGST is charged on 38 ka value. GST compensation cess is also charged here on 310 ka value. Or, sir, or transaction value, if it is a bond to bond transfer, then, sir, IGST or GST compensation cess is charged on 38 ka value or transaction value whichever is higher, 310 ka value or transaction value whichever is higher. That is told in section number 38A or 310A. That is told in this two section. Okay, sir, point is clear. Let's go ahead, everyone over here. Once you go ahead and add those two amount, the total will come. Always remember in your exam, if they go ahead and tell you, please tell the custom duties. Basic custom duty is also custom duty. Protective duty is also custom duty. CVD 31 is also custom duty. Social welfare surcharge is also custom duty. CVD 35 is also custom duty. Safeguard duty, CVD on subsidized article, anti-dumping duty, IGST and GST compensation cess is also custom duty when it is collected under the Customs Act. Okay, sir, we got it. Everyone over here now. Now, there is one more section, section number 5. You have to read it at home. What is section number 5 telling? They are going ahead and telling, sir, lower rate of duty will be charged whenever there is a trade agreement between Indian government and the government of a foreign country. Then in that scenario, whatever is told in the trade agreement, according to that the custom duty shall be charged. If in the trade agreement lower rate is told, lower rate shall be charged. Okay, sir, point is clear. Sir, duration of protective duty, homework, increase in export duty and import duty. This is the emergency power with the government. If government in an emergency situation wants to go ahead and increase import duty and export duty, government can take the help of section number 8 and 8A. Safeguard measures are very, very important for your exam. CVD on subsidized article is also very, very important for your exam. Anti-dumping duty is also very, very important. I feel this one safeguard measure or CVD on subsidized article or anti-dumping duty, say they should go ahead and ask you one question. Okay, sir, point is clear. Next. Now, after this, everyone, after this, there is section number 9B, section number 9C. These two sections you guys can read at home. Now, there is one more major amendment in the chapter. Agriculture Infrastructure Development Cess is being introduced. Agriculture Infrastructure Development Cess is being introduced by Finance Act 2021. They will not ask you a practical question, but they will go ahead and ask you, they can go ahead and ask you, write a note on agriculture, infrastructure and development cess. So, sir, section number 124 of the section number 124 of the Finance Act 2021 went ahead and introduced agriculture, infrastructure and development cess. Sir, on what is it levied? It is levied on import of specified goods at the notified rate. So basically government will go ahead and notify the rate and it will be applicable only on some specified goods which are told. Okay, now if you see on petrol, if I'm not wrong, 2.5 rupees is being notified. On diesel, 4 rupees is being notified. So this way, government will go ahead and notify the rate. For instance, some of the notified goods are apple, kabli chana, gold, silver, etc. Okay, sir. This cess will be used to finance the improvement of agriculture infrastructure. So government wants to go ahead and develop agriculture infrastructure, and hence government is going ahead and telling we will go ahead and charge agriculture infrastructure development cess for agriculture infrastructure development and other development expenditure. This cess on imported goods shall be in addition to other duties of custom. This cess is in addition to other duties of custom. Okay, sir. And the value for agriculture infrastructure development cess is calculated in the same manner as the value of goods is calculated for the purpose of custom duty under section number 14 of the Custom Act. Okay, sir. There can be a short note, so be very careful, everyone. Right, everyone. Now, where are the amendments is written in green. I have gone ahead and explained you the whole chapter. I'll go ahead and close my chapter of duties, types of duties over here, everyone.